And now we're joined by Mr. Amit Kumar Singh, CEO at the company, joining in with us. Thank you so much, Mr. Singh, for joining in with us this afternoon on ET Now. And, I just want to understand in terms of obviously this is seven special purpose vehicles that will be coming in under this Bharat, Highways Invit, which is there, the company. So seven of these SPVs are there. When you're looking at it in terms of the revenues that have been coming in, we're seeing a bit of a decline. So if you could help us understand in terms of what is the trajectory looking like going forward as well. Despite the revenues coming down, your profits are something that I've seen an improvement. So could help us understand the business and how this works as well?
Yeah, sure. Thanks. So I think for revenue, I think this is a little this because what happens is uh, under this Ind AS, when these assets are getting constructed, even that construction period, during that construction period, it gets added in the revenue. So because it gets categorized as a financial asset, and then what happens when your asset is complete, then whatever annuities which you are going to receive from NHAI, that's categorized as a financial asset, and then you just get interest on that financial asset as your revenue. So I think maybe just for a simplicity perspective, what I would say that you should look at, say, EBITDA. And if I talk about, say, EBITDA, my FY24 EBITDA was or is going to be almost north of 10,000, north of 1,000 crores. My FY25 is again around 1,004 odd crores. FY26 is going to be almost around 950 odd crores, in that range. But one thing we need to understand that we are talking about seven completed HAM assets, which is going to come under this InvIT's fold, right? So under this, what happens, authority, this HAM model is authority gives you, suppose 100 rupees your total construction cost, authority pays you 40 rupees during construction, and 60 rupees you get over next 15 years, during your operation period, and in a form of semi-annual annuities. So basically, you are eligible to get, say, 30 annuities over next 15 years. Now, what happens, of course, in our case, we have already received. So if I do this 30 into 7 assets, we should have ideally received 210 annuities, but 37 annuities have already been received. That means, of course, all these concessions are nearing to its, over. So basically 15 years, basically period, what we talk about. So my weighted average, which ideally should have been 15 years, is right now 12 years, because we have already received 37 out of the total 210 annuities. So if we talk about this, only these seven assets as a part of the formation transaction, which is going to this InvIT, of course, when these assets will be nearing toward the concession, your revenue will, blip, and that's what you can see happening. But how this has been taken care is that this InvIT has got into a ROFO arrangement with GR Infra. GR Infra is a listed play, and they are one of the largest road contractor of the country. And what happening is we have gone to a ROFO with GR, where basically not these seven assets, next 23 assets, which is at the different stages of development, InvIT will have a ROFO on that. So by doing that, we are achieving two things. First, of course, this revenue blip, basically concern what we are talking about, that will be taken care of, because when the new asset will get added, of course, the cash flows from new assets will also get added to this overall of the first seven asset what we're talking about here. And second thing, of course, with addition of these 23 assets, we'll be able to elongate the life of our InvIT. So I think from a revenue perspective, you need to understand the cash flow, not just don't look at the profitability and all, because this is a more complicated financial asset in India, which is difficult to explain.
Absolutely, yeah. This does help us understand in terms of what we should be looking going forward as well. But obviously, my next question was going to be in terms of stability of revenue after the seven projects. But you did highlight about the 23 projects that are there as well. So in terms of overall, what is the risk that you would face if there is a premature termination on that occasion as well? And in terms of the cash flow risk that comes into that front, is that something that you all would be keeping on the side, or would be looking at maintaining some balance for these terminations then?
See, actually, what happens in HAM concessions, termination will happen. If termination happens, you are entitled to get 65% of your outstanding annuities receivable at the time of termination. So just to put in a simple numbers perspective, 100 rupees in the same example, 100 rupees where the authority paid you 40 during construction, 60 are eligible to get over the next 15 years. And suppose that 60 becomes, say, maybe 55 or 50 because you would have received some annuities. Now, if say termination happens, so 65% of that 50 rupees, which is I think would be I think 32.5%, you will receive as a termination payment. However, we also need to see that uh, what is the reason why this any project will get terminated. And if you go through the concession agreement, I think the most critical reason why authority will basically terminate your project is that if you are not fulfilling your maintenance obligation properly. What is this maintenance obligation? So you must have seen that once the road gets built, we need to maintain those roads properly as per the the agreements which is enshrined in the concession agreement. Now that is the reason why your concession will get terminated. And to take care of that, basically what we have done is we have got through our project manager Adhar Shila, we have got a back with GR Infra who has constructed these roads for a operation and maintenance for the balance life of the concession period, and they will be maintaining these assets for the balance concession, not this 7 plus the 23 ham, 23 more ROFO ham assets, what we are talking about. Plus, we also have a ROFO with GR that over the next 5 years, whatever GR will build, InvIT will have a ROFO on that. So for those assets also, we'll have a back-to-back with GR. So basically, this termination concern we're trying to address by having a back-to-back with GR. GR is a AA plus risk. NHI is a AAA, risk. So you are getting your annuities from a AAA risk, and you are getting your O&M and major maintenance done from a AA plus guy. So this is the risk, profile you are basically playing with from a AAA to a AA plus. And I think there how, the termination concern, gets addressed. Yeah.
Uh, Mr. Singh, there's one thing that I want to know. So, obviously, you mentioned that utilizing the funds is going to be only for these 7 projects, or even the other 23 projects that you're mentioning as well. And what is the impact of increasing cost of maintenance? How does that also affect the business? Then is that a worry for the business then in terms of your margins or your profitability with the increased cost?
No, so actually, yeah, how we have done here is that first I'll take your first question. So first question, what is what happening is that we are, we would have rather 35-27 crores of the debt as on say end of Feb across these 7 SPVs. So the money what we are raising, 2,500 crores, out of that 2,400 crores will be used to pay these debts down across the 7 SPVs. And that, that will leave us with almost 11-27 crores of the debt, which will raise at the InvIT level. So you see from that perspective, from in an InvIT, from a leverage perspective, what we should look at is say a debt to EV, enterprise value. That ratio will be around 20% only. So that will give us, and as per the SEBI InvIT regulation, initially you can have a 49% leverage, which is like debt to EV can be 49%, and subject to you remain AAA and you do 6 successful distribution, you can become 70%. So now what we are planning to do is that this once this 7 assets get, of course, because this 7 assets InvIT will acquire, InvIT will be left with only 20% of the leverage. InvIT will raise more debt at the InvIT level, and they will acquire basically further assets, whether it's a ROFO assets or a non-ROFO assets, which is like third party non-GR assets. So in terms of, just to give you a number, we can have almost 3,500 crores even before we reach 49%, and we can have balance 3,500 crores. Even if you want to reach say around 60 to 63% of our allowed leverage of 70%, this 7,000 crores we can use to acquire further 23 further assets out of that list of 23, plus any other non-GR assets which we can look in the market, which we are already started looking at. Yeah, looking at.
Right, Mr. Singh, thank you so much for joining in with us, as well as good luck for your IPO, which is opening for subscription tomorrow as well. That was the management of Bharat Invit joining in with us.